What's the difference between dream big and reach for the stars? No, we're not talking about the definitions and differences of cliches and platitudes, but I am going to use another one right here. A goal without a plan is just a wish. You can dream of winning the lottery, but if you don't enter, there's no chance you're going to win it. You can wish you had financial security or a retirement plan that will provide financial security for your golden years. But if you don't make a plan and take action on that plan, it remains just a dream or a wish, and it's very unlikely to happen. Aloha, I'm Stan Cox, principal broker and strategist with SC Finance Strategies and Insurance Consultants. I'm also the author of the books on the tax-free cash growth warehouse strategy, and I'm the managing director of the Hawaii Financial Freethinkers Academy, a nonprofit financial literacy education organization. For the past several years, I have focused on and specialized in the infinite banking concept and the tax-free cash growth warehouse finance strategy. So if you find this to be helpful, please hit the like button for this video and subscribe to this channel. Also, please post your questions and comments here. So let's talk about some practical and really quite common goals and how infinite banking and the tax-free cash growth warehouse strategy can help you to achieve them. One common and very practical goal is to get out of debt. We live in a credit society where FICO scores are important, and everyone, it seems, wants you to buy their goods and services on credit. And never mind the interest charged or how long it'll put you in debt. Focus on how low the payments are. You can afford the payments, right? You want this thing that I'm selling you, right? And so it goes. And we go deeper and deeper in debt. Eventually, we realize how deep in the credit hole we've got, and we want to get out. Again, wishing and dreaming doesn't do anything. So we need to make a plan and then follow the plan with action. The usual options for getting out of debt is to start making more than the required minimum payments and stop adding to the credit loans. That is, stop using the credit cards. Often that requires taking on overtime at work or taking on additional jobs. None of that is any fun at all. But in the end, when the debt is finally all paid off, it is rewarding. Now, how can infinite banking and the tax-free cash growth warehouse strategy help in this case? When you have an infinite banking tax-free cash growth warehouse account set up and you have cash value that you can leverage in it, you can use the TFCGW sweep account strategy to get those credit balances paid off faster than the standard options will, and certainly with much greater overall benefits. One reason for that is your infinite banking tax-free cash growth warehouse account will have a lower simple interest rate than your credit cards do. So leveraging your tax-free cash growth warehouse account to pay off your credit cards will save you money right there in the interest charged. Of course, on top of that, your TFCGW account is earning high compounding dividend interest even while you have it leveraged to pay off the higher credit interest accounts. Now, let's say that your credit card balance is $10,000 and the credit card company is charging you 15% interest. If your minimum monthly payment is $300, about $125 of that is just to pay the month's interest. So only $175 is going to pay the principal. Now, you leverage your tax-free cash growth warehouse account for the $10,000, pay off the credit card. Basically, what you've done is you've transferred the credit card balance to your tax-free cash growth warehouse account. Interest on your leverage loan is, let's say, 6%. Now, instead of paying more than usual to the credit card company, you pay the same $300 towards your TFCGW leverage loan. Now, get this, only $50 is paying for the interest, and $250 is going to pay down the principal. It's going to get it paid off a lot faster. And at the same time, your TFCGW account is receiving dividend interest of $50 per month at 6%. So the bottom line is the interest charge is being paid by the insurance company for you. Now, if you haven't started your infinite banking tax-free cash growth warehouse account yet, and you have the goal of paying off your debt, what we'll want to do is to make a plan for the design of your account to figure on that credit payoff strategy so that you can easily feed into your TFCGW account in order to build up the cash value as quickly as possible so you can leverage it and get those nasty high interest credit loans paid off right away. Now, if you have car loans, the interest on those loans may be at a comparably small percentage rate, but it's amortized interest, so the total interest charge is much higher than the interest rate would suggest. So likely you'll want to get that paid off as quickly as possible too. The process and the results are the same as with the other credit loans. Oh, and I just want to add a bit of advice here. When you pay off your credit cards, don't close the accounts. Keep the accounts open, just don't use them. The reason for that is because when you have a low or zero balance on your credit cards, it improves your FICO credit score based on the lower percentage of credit used versus your total available credit. The biggest debt most people ever incur is a mortgage for a home. That is also amortized interest and will add around 50% or more to the total cost and what you will end up paying for the property. Mortgage interest is massive. It can seem overwhelming, but you can deal with it in a similar manner as with the other credit debt that we've been discussing. There is a specific strategy for handling mortgage debt and getting it paid off a lot faster than the loan typically calls for. There is a bit more to it, but it is essentially the same as what we've been discussing here with credit cards and car loans. But in the case of mortgage loans, like eating an elephant, which we would never actually eat an elephant, but if we did, it would be one bite at a time. Now, I want to talk briefly about the goal of creating financial security for retirement. If you have a 401k or IRA or similar qualified retirement account, likely it's invested in the stock market. It may be diversified between high, medium, and low risk investments, but in each of those categories, you notice the word risk? That means your entire account is at risk of loss. That's not a good thing, especially if the source of your entire retirement income is hinging on that risk environment. Whole life insurance is a conservative growth environment, which many people equate with low returns, but it is guaranteed. It is not at risk of loss. And that's a good thing, especially if you're counting on it to be there sometime in the future. Now, we have another video on this channel that compares the guaranteed gains of participating whole life to the actual historical average gains with qualified investment accounts. So I'm not going to get into that here, but suffice to say that those projected the investment account gains are really not what they're cracked up to be. Okay, anyway, the point I want to make here is that the money grows within a well-designed participating whole life account, what we call a tax-free cash growth warehouse account, is guaranteed, safe, compounding, and tax-free. So if you plan for its use as a supplemental retirement income, you can feed it so that it grows substantially and then use the money without being taxed on it. That's a big deal because, you know, income tax rates are bound to go higher. And any qualified accounts you take money from in the future will be taxed at the higher rate when you take it. So I suggest that at least part of your retirement income strategy should be the cash value of a well-designed participating whole life insurance policy. Now, again, if you have found this to be helpful, please hit the like button for this video and subscribe to this channel. Also, please post your questions and comments here. For a more complete explanation of the tax-free cash growth warehouse strategy, you can watch our free 60-minute webinar on this channel. The link is in the description box below. The link to buy my books on Amazon.com is also below. And if you'd like to book a free phone consultation with me, the link to my Calendly page is also below. If you'd like to apply to become a client of ours, the link to the application is also below. We're here to help, and we look forward to helping you. Aloha and mahalo for watching.